Good morning. Welcome to the B.F. Anderson Technical Report for August the 1st. I'm doing a special report based on the fact that the Federal Reserve did announce a decrease of the Fed funds rate by 0.25. It was an important day. Remember, the long-term statistics simply say that when the Fed cuts rates, there's a lag effect. And so over the next 12 months, we hope that this reduction of interest rates will stimulate the economy, which is what this is all about. Now, the reason I'm going to Thursdays, I'm going to go back to Thursdays on these reports, mainly because the data comes in during the week. We start getting fresh data on Monday through Wednesday, Thursday. So Thursday mornings make sense. Monday mornings are just not as good of an idea. Now let's get right into the charts. Let's see what happened yesterday. Let's see how the market reacted to this. We had a pretty severe pullback, over 1% on the NASDAQ. Above average volume came into it, so we are in basically a correction here. As you can see on the weekly graph, so far this week we have pulled back, but we're well above the 35-week moving average, so we're okay there. The advanced decline line, we had substantial decliners yesterday. However, the overall long-term trend of the advanced decline line remains positive. On the high-low index, we actually got an uptick yesterday. We are in earnings season, and so far so good. On the number of new lows yesterday, we had 42, which is over our 40, but not an enormous amount. The long-term graph continues to stay positive. We will get an updated version as the month comes to an end. On the fear-greed index, now, a couple of weeks ago, or really last week, I mentioned that we were getting into greed, and we weren't in extreme greed, but we tend to get corrections in the market when we get into this period here where there's just a little bit too much optimism. I mean, the put-call ratio is very simple. It is the institutional investors hedging their portfolios with options. And you can see this and kind of make a determination as to what their attitude is. Well, we're starting to get back into neutral, and in fact, we're close to going back into fear. Now, the long-term graph using the 200-week moving average continues to look very positive, good positive uptrend, no problem there. Now, on the value line geometric, I'm getting a little frustrated with it. It's kind of like the small cap Russell 2000. I'll talk a little bit more about that. But you can see here that we're just continuing to stay stuck. And it's really been going on since around 2016 that the value line has just not made any headway. Now, on the global Dow, kind of a same story. The problem the Fed is having is that the international markets international economies are just not doing as well as they would like. Now, I want to talk a little bit about small caps because I've been going round and round on what to do about this. The Russell 2000, which is another index that is used for the evaluation of small caps, this is the S&P 600. The problem I'm having with the Russell 2000 is just too many stocks. However, I cannot ignore the fact that we're starting to see a breakout of the small cap stocks. Now, if the small caps, now you must realize every other index out there, S&P, Dow, New York Composite, they're all hitting new highs. Well, the small caps are a long way. I mean, their old high up here at 1,100, and we're down here at about 963. But if we can get a breakout in the small caps and get an uptrend going in the small caps, I really think that's going to be a meaningful situation. Now, the stocks that are making our list as of last night, Chipotle Mexican Grill, they came out with earnings recently. We own the stock. It broke out on earnings and this is kind of what you would call a gap up buy signal with an ascending flag. I'll show you more of that here in another example. Here's an example here. We do have a position in this company, Enphase Energy. Look at the volume that came in. They announced earnings yesterday. Their revenues were up 77%, and their earnings were up 20-fold. They have a tremendous earnings report. Stock normally trades about 3-4 million shares a day. Traded over 22 million shares yesterday with a big gap up. Now, a gap up buy signal is a very difficult signal to understand, but most people will not buy a stock when it gaps up like this because they feel like it's too high. Now, there is risk here, of course, but what we're looking for would be, this is kind of like a flagpole, and then you get what you call a flag pattern where the stock would, like a flag, comes off. Now, we probably may see some consolidation, and we may even see a descending flag, but what you want to see is ascending flag. Interesting pattern. Here's Guardant Health, continues to act well, holding right there at the 10-day moving average. Here's Roku. Now, Roku is kind of pulling back a little bit. They're scheduled to report earnings soon, but you can see that it's kind of struggling to stay above that 10-day moving average. Then we have Snap, which again, here's another gap up buy signal. You had an ascending flag, now it's starting to descend, but it's staying with it. It's holding the gap, so that's important. So all in all, what I am saying here is the Fed has reported. We've got the jobs report on Friday, and we'll start doing these reports on Thursdays. Call me if you have any questions.